Welcome back to new weekly market update. The geopolitical situation remains about the same.
Yes, Reem, we see this fragile ceasefire between the Americans and Iranians postponing. The Strait of Hormuz is still blocked with barriers, and we have another ceasefire to happen between Lebanon and Israel. Oil prices go above $100 per barrel, while AI stocks are performing pretty nicely. Markets are compelling to our analysis smoothly. Let's see how that's looking on charts. All right, everyone, here we are kicking off our weekly market outlook upon the 5 major assets, starting with NASDAQ. We can see, as we had highlighted in the previous week, NASDAQ retraced to this trend line, this demand zone, and gave us a confirmation on a lower time frame to go for a bullish trade, and now it's about all-time highest. So currently, we can see that NASDAQ is in an ascending channel. Right? We can see that the price is in the middle of that ascending channel. So what ultimately or optimally we want to see some sort of retracement, the confirmation before we go for another bullish entry, right? You never really want to sell it right now, short it by any means, even though it's about all-time highest. And entering now for a bullish trade also is not as optimal because the price is not at a good entry. So if you want to trade it, wait for a retracement, go for a bullish trade. That's about NASDAQ. Going into gold, as I had anticipated in the previous week, due to this rising wedge pattern and the price being at this resistance level, we can see that price fell down and it was bearish as we analyzed in the previous week. Now, speaking about the upcoming week, on a lower time frame, we have a change of character to this trend, right? So before this change of character, we had this head and shoulders pattern forming, right, on a lower time frame. That is the leg here of the head and shoulder pattern, and market moved to it. So this was a very decent bearish movement. We got some sort of rejection here after a solid sell, but we have a break of structure to the upside, and that was due actually to some reports that came by the weekend, and then people closed their trades. So speaking of gold, on this mid time frame, we can see that gold is still considered bearish. So it might actually continue in a bearish momentum going to 4,620s. However, we have the level of 4,741, or rather say the price of 4,741, which is pretty close to here. I can say, yes, it's about $30 price change. If you speak about all history, aside from the last 2 years, $30 changing as the price change in gold is pretty considered as a lot. But nowadays it's a candle or two, or less than a candle sometimes. All right, so if the market breaks above it, the level of 4,741, we could see a possible continuation to 4,850s, right? Or 40s, 50 as an optimal target, 4,840s as a possibility. So if it breaks above that level, so it is bearish unless we see that breakout, we get a confirmation, we can go for a long trade. Otherwise, an expectation for a break below is still looming there. So it's not clear until a market opens. Technically, now fundamentally, there are a lot going on. I'll leave that to Mr. Emedian to share with you guys. Now, going into Euro USD, Euro USD actually moved bearish due to the strength on the dollar because of what happened with the Strait of Hormuz, and people find trust in the dollar to buy oil and to buy AI related stocks. So what is happening on Euro right now, actually, we can see there is a rounding bottom here forming, right? And on a higher time frame, there is a bigger cup and handle pattern. So if we go in a bigger picture, we can see that Euro USD technically is pretty bullish, I'd say, right? And we can see a movement to the upside from here, a continuation to the upside of that trend line where this resistance is laying. So that's what we can expect technically from USD. Of course, be cautious about your risk management, because this is a time in history where there is a possible war looming, yet still people are not massively buying gold. Rather, they're buying oil because of the geopolitical tensions in the Middle East, and also because they're looking to buy AI-related stocks, which you need a dollar to buy it. So that's how technically it looks. Keep in mind risk management. Speaking of Bitcoin, I did highlight Bitcoin that it could do a deep retracement, guys, to that support in the previous week. This is what happened, and we saw that. Now market is forming some sort of descending triangle on Bitcoin. So from here, we could see it moving to the support, possibly making a pin bar before a continuation to the upside. And yes, I've been highlighting Bitcoin is bullish, bullish, bullish for a long time. Hope you guys are making some good trades with that. So that's about Bitcoin. Going to Nifty 50. Nifty 50. Going to Nifty 50. Nifty 50 is in a situation where it is forming a downtrend, I'd say. And yes, it moved to where we had anticipated, a continuation to the upside, as I highlighted in the previous week. And from there, we found actually a rejection, pushing it back to support. So right now, it is at support to what seemed to be a downtrend. However, I expect that there could be a continuation to the upside, right? Or there could actually be a continuation to the downside. And I'm saying continuation because it is making an impulsive, it had started to make an impulsive movement to the upside from this demand zone, which is indicating strong demand. This could be a retracement to the downside because it is a resistance. So what I am saying right now is that market is in the middle between this resistance and the support, and there could be a possible continuation on the downside to that support before it starts moving up. So care about trading for Nifty 50 for the upcoming week. It could actually move to either direction. So that's about Nifty 50 and technical outlook for the upcoming week. Now I'm gonna shift the mic to Mr. Median from London to speak about some fundamental analysis.
Thank you, Simon, for sharing your insightful analysis on the technical side. Here is Amir Amidian, Master of Finance and Investment student in the UK, and also financial market analyst at Zealand. Hope and optimism came again back to the financial markets and among the market participants. Let's have a look. Greeting everyone, welcome back to the weekly market update hosted by Zealand. Last week, at the end of the week, we saw again that the hope came back among the financial market participants. I want to start this session first of all with semiconductors, as it was the main reason to push the stock market higher. Also, we got some corporate earnings last week, as we will talk about it later. First of all, regarding the semiconductors remain in a strong demand driven by AI, data centers, and ongoing supply constraints in advanced chips. Also, regarding the corporate earnings, we got the Tesla and Intel earnings. First of all, regarding the Tesla, margins came under the pressure from price cut, but deliveries stayed solid. Focus is shifting toward AI and robotic growth. For the Intel also, results beat the expectations on a strong AI chip demand and data centers strength. Last week was packed with the economic indicators, mostly CPI numbers from the different regions, such as Canada, New Zealand, and also UK. Let's start first of all with the Canada, as the Canada CPI rose by 2.4% year over year in March, up from 1.8% in February, mainly driven by higher energy and gasoline prices linked to the Middle East tensions. If we exclude fuel and energy prices, inflation actually slowed while monthly prices rose 0.9%, showing some underlying easing once energy effects are removed. The second one was the New Zealand, as in the New Zealand CPI rose by 0.9% quarter over quarter, driven again mainly by the petrol and energy prices. And eventually, in the United Kingdom, UK inflation rose in March, with CPI at 3.3% year over year and CPIH at 3.4%, which again, the petrol was the main reason for the price increase in the CPI. Core inflation eased slightly, which is a good news for the Bank of England, but services inflation remained elevated, highlighting the persistent underlying price pressures. Last week, we got also one of the earliest testifies by the new Fed Chairman Kevin Warsh. The Kevin Warsh Fed Chair confirmation hearing was neutral to hawkish, with a strong focus on inflation control and no signals of near-term rate cuts. He emphasized the independency of the Federal Reserve from the politicians such as Donald Trump. Overall, markets saw it as a policy continuity with a tighter bias, not a major shift from Jerome Powell's approach. Last week, we got also the latest update for the Purchasing Managers Index in all around the world, such as the US, European Union, and also UK again. I want to start this chapter with the United States. The US PMI showed a modest rebound in April, but growth remains weak, especially in services. Rising costs and supply issues pushed the inflation to the highest level since 2022. In the European Union, Germany's PMI slipped into the contraction in April, ending a 10-month growth streak as war-driven uncertainty and rising costs hit the activity. The last one was the United Kingdom, as the UK PMI shows output growth picked up in April after the slowdown we faced in March. Worth to be mentioned, the main reason for the slowdown of the economy is mentioned due to the war and the tensions at the Middle East. The subcategory inflationary measure in the PMI showed that the rising costs and the supply delays pushed inflation sharply higher, and also the weaker confidence signals the growth which we face in April may not gonna be stable. From the geopolitical side, Iran geopolitics remain a key global risk driver, mainly due to the tensions with the US and uncertainty over the nuclear talks. And also, thank you, Sarah, for sharing your insightful analysis on the technical side. Here is Amir Amidian, Master of Finance and Investment student in UK, also financial market analyst at Zealand. Hope and optimism came again back to the financial markets and among the market participants. Let's have a look.
Are going to release their latest update for the interest rate, refinancing, and other stuff by the next week. We can call the next week the central bank's week. Initially, at the beginning of the week, the Bank of Japan is gonna release the monetary policy statement, outlook report, and also policy rate decision, and let's see whether they are gonna increase the rate or not. But market participants are expecting no increase for the interest rate by the Bank of Japan in the next week. And later we are going to receive the Canadian Central Bank at the middle of the week on Wednesday, and same day on the Wednesday 29th of April we are going to receive the Fed fund rate, Federal Reserve statement, and also the press conference of the Jerome Powell. Later on 30th of April we are going to receive the monetary policy report by the Bank of England, monetary policy summary, and the MPC official bank rate votes. Same day as well, the European Central Bank is gonna do the same for the refinancing rate in the European Union. Besides the central banks, some crucial economic indicators will be released as well, such as the GDP for the first time, or by say the first estimate for the second quarter of 2026 in the United States, and also employment cost index, which is quarterly released. And at the beginning of the week, the CPI numbers for the Australian dollar will be at the center of attention. Stay tuned with Zealand. See you next week.